The major markets climbed higher for the second week in a row, with all 5 major markets ending positive. The gains were largely based on hopes that the domestic market was either at or near the worst phase of the coronavirus outbreak. As of Monday, the United States continued to have the highest number of confirmed cases by a significant factor, with 778,176 cases. The total deaths have reached up to 41,575, which represents a 5.3% mortality rate for this pandemic in the United States. As various different local and federal agencies try to develop plans that balance shelter-in-place rules with economic ease and freedom, the economic reports continue to display results that either have never been seen or haven't been seen in decades. Oil made headlines for the surge in price at the beginning of this month in the hopes that a production cut between the OPEC Plus members would come to fruition. Despite any tentative agreements made between these members, oil plunged over 20% intra-week, with the June WTI futures reaching as low as $17.31 on Friday, and the GSCI crude oil index ending the week with a year-to-date loss of 67.87%. Demand has been an issue as manufacturing has continued to struggle. April's Empire State Manufacturing Survey saw a drop in the general business conditions to negative 78.2, the lowest on record by a large margin. While not as substantial of a drop, the Industrial Production Index fell 5.4% for the month of March, reflecting the largest decline since January of 1946. Housing was also impacted as the NAHB Housing Market Index fell to the record low of 30. Housing starts declined by 22.3% in March to an annualized rate of 1.216 million units. This is the lowest month-over-month reading since March of 1984. Back when the average 30-year Freddie Mac mortgage was 13.39%, compared to last month's average of 3.45%. Meanwhile, Thursday's weekly initial jobless claims reflected another 5.245 million. This raised the 4-week total loss to 22 million. Employers have struggled to stay open and staffed in this environment. Unfortunately, last week, the Paycheck Protection Program reached its $350 billion limit. Due to overwhelming demand, many small businesses had not yet applied or were in the process of applying for the program. This has already led to debate in Washington, D.C. as to what each party's solution would be to resolve this issue. Going forward, politicians will continue to debate how and when to reopen the domestic economy and try to return life to a sense of normalcy.